So hi everybody. I hope you are magic. So I should say hello from downtown Japan. Let me make sure I can get your chat because I would love as we start to roll through the webinar. Let me get that chat function up. What I would love to do for everybody, guys out there in the world, I would love to find out as we move through the webinar where you are currently joining the webinar from. So literally, where are you in the world? Now, my name is Lockie. I was Queensland, so yes, there will be some Aussies, no doubt, in the webinar today. So WA, we've got Perth. G'day Jeff, how are you? G'day Ray, Gold Coast. Gold Coast, okay, Tamworth, awesome. We're no doubt all Sinur and Bar. I was going to say we've got to go overseas at some point in time. So right, so we're overseas as well, guys. So we're in Bali. So Indo, g'day John, Gold Coast. Fantastic. Well, guys, awesome to have you in the webinar. Really, really good to guys to be working with the trading pit. As I had a quick chat with Alex before. We were talking about the pros and cons of trading and the pros and cons of being in Singapore versus everywhere else in the world. Now, Wes has just mentioned sound, guys. Can I do a quick sound check? Make sure that everybody can definitely hear us. I do believe that the sound is working well, so it's good for Kay. Wes, it might be a speaker, it might be okay. No, it's definitely Wes. Very good. All right, have a crack. Of course, if I say Wes, fix your speaker, of course you can't hear me, can he? That's not going to work. Okay, so let me just, guys, I'll just do a quick message to young Wes, and just there we go. Wes, just say sound is good. Sound is good. All right, I'll just, of course, I'm saying that where's the sound is good, but if you can't hear me, that's obviously not going to work, is it? So now that being said, guys, as I said, introduced by Alex, welcome to the webinar. We're going to be around about 60 minutes tonight. I do want to get into candlestick analysis. It is a beginner webinar, guys. It is a beginner webinar tonight. So again, for a number of you may have been in a webinar with me last night, Suzanne in particular. This webinar is going to be very, very good for you because we're going to focus on the really, really simple stuff. Right? So we're going to actually go down the candlestick analysis. We're going to focus on ratios. What we're then going to do, Suzanne, as we did last night, what we're going to do is I'm actually going to bring up the live NASDAQ chart and we'll actually see how much you've learned in webinar number 1. I can't see the chats. Oh, Ray, that could be fixed in the background potentially. Hold on one sec. Let me see if I can fix that for you. Chat. Oops, I've just shrunk the chat function. That's not going to work very well for you. Let me do this. Now, that being said, it's going to have to be done by the trading pit for you, mate. I don't actually have that privilege.
Well, actually, I just make you co-host so you can.
Oh, thank you, Alex. I appreciate that. So, guys, it's normally I do webinars. So it's great to be assisted, guys, in a webinar. So I'll switch the privileges across, guys, so you can actually chat amongst yourselves if you would like to. As I said, guys, I've got 60 minutes now. Everybody knows if you've been to a presentation I've done before, I'm absolutely famous. G'day, Beck. How are you? Beck, hope you are amazing. I am famous for going over time. So I'm going to be very careful about that, guys. I've got a lot of information I want to share with you. Flip side being is we are going international today. So we are very international tonight. So I'm going to move as quickly, as succinctly as I can. Where I do want to end up, guys, I do want to end up in the live charts, proving the theory that we've gone through today. And this webinar, guys, is one of a series of 9 webinars. Thank you. Thank you, Malaysia. Howard, guys, Lockie said going over time is fine, Lockie, because you always add massive value. But it is my first webinar, guys, with the trading pit, so I do have to behave. Otherwise, I'll get a speeding ticket. Now, that being said, Diane said, I don't think you get speeding tickets anymore. No, I don't. That's old school, Diane. That's old school. All right, well, we'll jump into it because I do want to get done in around about 60 minutes. So tonight we're going to be doing candlestick analysis. The beauty of the candlestick analysis is we want to be able to read the markets. Now, tonight we're going to be doing the NASDAQ because it's a really, really good market for beginner traders. But all of the stuff we're going to be going through tonight applies to the NASDAQ as it does the S&P 500, as it does the currencies, as it does the cryptos, as it does the stocks. right? So it doesn't matter what market you trade. It doesn't matter where you are in the world, guys. You can apply the principles we're about to do on a 5-minute chart. You can apply it to a 60-minute chart, a 4-hour chart, even a daily chart. In fact, today, just to highlight that point, we're actually in a 4-hour long on the NASDAQ. Okay, so for the 4-hour chart traders, very, very typical, guys, for Forex traders to love 4-hour charts. But that being said, for the Forex traders today, there's been some incredible opportunities on the 4-hour chart. In saying that, those opportunities are going to match exactly what we did on the 5-minute chart. So guys, the beauty of candlestick analysis is what we're going to be doing today. The very, very basic principles of candlestick analysis are actually mathematical principles. And as a result, generally speaking, I suggest 1 + 1 = 2, no matter where you go in the world. As a result, the principles that we're going to be doing tonight are applicable to all trading disciplines, all trading styles. It just so happens we're going to be on a 5-minute chart because that is not only one of the best futures trading charts in the world, it's the chart that we use to run the live trading rooms on a daily basis, which is obviously good fun. And the LTR, guys, the live trading room today did have a really good little session. Okay, a really good little session. I'll actually mention, guys, when we go into the live charts, what a number of the traders did. But there is a young guy, guys, on the Gold Coast called Andy. Guys, he did 152 ticks tonight on the NASDAQ at $5 per tick. So you can do the math on that, 152 times 5. That was a trade, guys. We identified it in the live trading room. And the difference between someone that went for $100 and someone that went for a lot more is simply the length of which they held on to that trade for. Okay, so we're going to be talking about that, guys, in the session tonight as well. Now, the goal, guys, my target as a result of the session, very, very simple target tonight, guys, but ultimately, at the end of this session, we're going to be working on 4 principles, or right throughout the session. My target, my goal, guys, I don't want to get too military on you, but my target is I want everybody by the end of this session to be able to identify who owns the candle, so who owns the close, how strong are they, and also how convincing are they. Now, the reason being is those are the 4 keys. Those are the 4 keys to super high probability trading. And ironically, as if you get really good at identifying those 4 things, not only can you basically read any market in the world, as I said, crypto, stocks, Forex, the whole box and dice, as not only can you read all of those, but you can actually understand why the market, for example, tonight, why is the NASDAQ buying really, really nicely? Why are we rallying on the NASDAQ? Literally, as I talk to you right now, why are we doing that? Well, that's because of the larger chart combination trading, as we will be doing. I think that's webinar 7 in our series of 9 webinars. So this is going to be quite a good little fun journey with the trading pit. And at the same time, as we will get some really good questions. The flip side of the questions, as if you do have a really good little question you want to ask, as I'm the kind of presenter, I try to be as interactive as I possibly can. So if you do have a question, I'll jump on it as quickly as I can. If it is a slightly more technical question, as in why do you use Fibonacci or something along those lines, I will also jump on that, but I'll take a little bit of time to get to it. Okay, just to make sure that if I'm on a flow with a certain concept and there's a lot of aha moments popping up, then I don't want to break that by jumping to something a little bit too technical. Now, speaking of that, I was in the webinar series. The first 3 webinars are for beginners. So my assumption is there'll be people on the webinar tonight that have not only don't know who I am, but have never actually traded before. The flip side, the second set of 3 webinars are intermediate. The third set are advanced. Right? So if you're going to join us for the full 9 series, and we can actually get quite technical and again, everything in context, I think it's going to be really, really good fun. Now, as that being said, because we are tonight, we're actually presenting across multiple disciplines. So I've just lost my little Zoom panel there. Because we are presenting across multiple disciplines, I do have to do a little bit of compliance work. So firstly, I do need to mention that there is risk in trading. Now, obviously, coming from Australia, I was working under AFSL. We understand the compliance is very, very strict in Australia. Guys, it's similar in Singapore. I know it's similar in Cyprus. It's similar all over the world. Now, the flip side of that, guys, we've got to do 3 compliance slides. Let me just put this little chat function down on a different screen for a moment. So again, understanding, guys, if you're trading futures or CFDs, you will be there will be risk in trading. We all know about that. Also, guys, both CFDs, for those of you who are doing long-range CFD trading, for us tonight, we're doing short-range futures trading. As all of those are traded on margin, so we need to understand that the effects of margin. And finally, guys, I do have to mention the information in the presentation tonight, general information only, and also the past performance of any financial product anywhere in the world now can no longer be used as a reference for future performance. Mind you, we did very well in the live trading room today. I'm quite proud of that. And we will just continue in the live trading room to just do our best every single day and get as many possible trades as we possibly can. Now, for those that don't know who I am, my name is Lockie. Former name, mum calls me Lachlan when I'm in trouble, but ultimately everyone calls me Lockie. Long story short, I've been in trading for around about 25 years. I had the opportunity to serve in the military for 15 years before that. My point being is that I am very, very military, not only goes with the way that I teach, but also the way that I trade. We are very, very strict with our rules. And as a result of that, we do generally trade very well on a daily basis. Have had the opportunity, guys, to be printed in multiple languages, had the opportunity to speak internationally, which has been fun. I've been on Sky News. I've done a whole lot of stuff in Australia, guys. Now I'm living internationally. We've got some very, very funny stuff going on in Japan. Ironically, I've just picked up an interview, guys, with a Japanese TV channel. Funny thing being is I don't speak a word of Japanese. So I don't know how that's going to go. I think I'm probably going to have to use an interpreter for that one. But suffice to say, guys, there's a lot of interest out there in the world regarding trading, particularly because of this economic uncertainty. We're obviously leading into the US, the 2024 election. There's a lot of uncertainty around that. We've got obviously wars and similar things breaking out globally. For me, guys, I tend to not get involved in the political side of the world. All of these political things going on, it just means the volatility of the markets are being driven up and down very, very quickly. And as a result, because we trade the market both up and down, we are getting really good trades on a daily basis. And saying that, guys, I've been running live trading rooms now for 12 years. It's been going relatively well for 12 years. So it kind of doesn't matter who wins the US election. If we were to keep simply a trading focus, doesn't really matter who wins, as the volatility will be hilarious regardless of who does do that. Now, guys, a little bit of a timeline. Whenever I come to a webinar or present a webinar or similar things, particularly for those that don't know me, those that might be watching this replay, guys, for the Trading Pit on YouTube. Either way, I want to do a quick sort of timeline, just so everybody knows where I'm coming from. So that is DJT, for those of you who know the president of the US. I had an opportunity, guys, to do some work with him in 2013. Suffice to say, I've called him the big guy. I know that might be a little bit controversial, but I have called him the big guy. Guys, 1st of August 2007, discovered futures trading. I was a Forex trader at that point in time. Guys, discovered the design of the futures markets and became a futures trader effectively straight away. 1st of August, I actually launched my first trading school in Australia. February 2010, the information that we're going to be doing tonight, that's when I basically wrote the strategy and indicators we're going to be talking about tonight. It's been shining ever since then. The slide is not showing. The slide, John, the slide should be showing. Oh, let me just double check. Let me just double check. All right, now, John, I appreciate that, but can you now see a slide? Can you now see a slide? I trust you probably can. Hold on one sec. It would actually help a lot. It would help a lot if I can show you. Well, there you go, guys. I can show you my slides there. So that's yeah, that's clearly not my first webinar, but I should have turned that on, shouldn't I? Okay, so as I said, guys, that's the big guy over there on the right-hand side. As I said, got to work with him in 2013. So my history, guys, from 1st of August 2007 all the way basically through to today. End of 2023, I moved across to Japan. Guys, I joined Doro Day Trading in Singapore. So effectively had the opportunity. Guys, in Australia, we actually had the biggest futures trading school in Southeast Asia. So I sold my share of that company in order to move over to Japan and start working with Doro. One of the key reasons, guys, I'm with Doro is the development of a prop trading desk, which we can do very, very easily in Singapore. In Australia, very, very difficult to do without running into lots of complications and similar stuff. Now, in saying that, guys, we'll move on. What we're going to be doing tonight, guys, candlestick analysis. Effectively, I'm going to teach you exactly how to analyze the candles. What we will then do, guys, from the actual European Open today, we'll go and analyze the charts based on the lessons that I've given you tonight and just have a look at the charts running live and ask the question, could I have identified some winning trades tonight if I was using my candlestick analysis principles? Now, understanding, guys, these have been around since 2010. They've been proven over thousands and thousands of trades. May I suggest that I do think we are going to learn some really good stuff tonight. We're going to do it in under 60 minutes in a perfect world. And then I'll be able to answer a ton of questions off the back end of it. Now, with our candlestick analysis, as we always want to focus on simplicity, right? So whenever I'm talking to you about trading or the power of trading, it's always going to focus on simplicity. Now, the reason being is if a trading algorithm is quite simple, it's very, very easy to replicate that algorithm. If a concept is simple, as even if you're brand new to trading, you'll be able to pick up that strategy or that approach to trading very, very quickly. As that starts to develop confidence and consistency in your trading, then comes the profit. And before you know it, as you're often racing as a profitable trader, and that is a really, really great place for everybody to be sitting. Now, the flip side of that, guys, there are 4 critical components to what we call a CSA formula. So you'll probably note, guys, everything I do is very mathematical in approach. As I said right at the start of the webinar, 1 + 1 = 2. Doesn't matter where you go in the world. And the beauty of that is we can replicate this algorithm no matter where you are, no matter what you trade, be it a 5-minute chart, 15-minute chart, 60-minute chart, 4-hour chart, makes absolutely no difference. So what we're going to be doing is we're going to basically focus on 4 components of every candle. Now, as I build this for you, the O stands for the open, the H stands for the high, the L stands for the low, and the C stands for the close. Now, if you wanted to write anything down, guys, in the webinar tonight, and you haven't seen this approach to analyzing candlesticks before, then do write that algorithm down. So it's literally open, high, low, close. Because what we're going to be doing is we're going to be using those 4 components of the candles. So every candle's got these components. We're going to be using those to basically answer the 4 very, very key questions, which will be down the bottom of this slide. Ultimately, who owns the candle? We want to know who owns the close. We want to know how strong they are. Now we obviously have an algorithm running behind the charts called efficiency, but ultimately you want to determine how strong they are and ultimately how convincing they are. Now, one of the reasons, guys, we want to do this, particularly if you want to be a futures trader, the reason we want to do this is because in the futures trading game, there are only 2 teams, right? So as Suzanne, ironically, as we were saying last night in the webinar, so you've got the buyers versus the sellers, and the stronger team has to win. All right, guys, let me say that again. You've got buyers versus sellers, and the stronger team has to win. Now, what that ultimately means, as a really, really successful trader, there's two strategies you can use. You can either identify the team that is failing and join the other team, or you can identify the team that is stronger and join that team. That's all you got to do. So when we go into the candlesticks tonight, guys, in fact, the first couple of trades on the NASDAQ this afternoon, guys, were all about identify the team that's failing and join the other team. That's when the trend was actually starting to reverse. Now the trend is set and you get these beautiful, big, strong buying candles, as we'll see when we go into the charts. In fact, let me show you guys what we're talking about right now. Let me show you the live NASDAQ chart. Okay, I'm just going to go full screen. We will come back, guys, and pull this apart in detail. But effectively, again, for those of you watching the webinar, you might be watching the recording. Naturally, that is a live chart, right? So it's a live NASDAQ chart. This is a 5-minute chart. I'll break down the chart in a little bit more detail a bit later on. But what I'm mentioning, guys, down the bottom here, again, these are the trades that were taken by some of the traders this afternoon. So these reversal trades all the way down the bottom were identifying, literally, identify the team that is failing and join the other team, right? So in this case here, the sellers were failing, so we joined the buyers, and the sellers failed again, then we joined the buyers. Once the trend has changed, so once that indicator switches from red to green, then what we're doing is we're looking for buyer strength in the market. Okay, so this is the chart we're going to come back to guys towards the end of the webinar, and based on what I'm teaching you, guys, I'm hoping that we come back to this webinar and suddenly the signals become really, really obvious. But what the NASDAQ has effectively done, the NASDAQ couldn't sell down coming into the European Open, so a number of traders bought the market. The market has then changed its direction. It was selling and then decided to buy. It's run up really, really beautifully until it's actually set up a series of reversal trades. Those of which those that know what I do, you can see this -3 reversal right up the top here off a pivot. Well, what are we in right now? We're basically turning and we're starting to trend back the other way. Right, so my goal is at the end of this webinar is you'll be able to use these beautiful principles called open, high, low, close. is to look at that chart and say, well, Lockie, I would have bought here, I would have sold here. This is the result of what's occurred. And I'll talk to you about what we did in the live trading room as well. So 2 trading principles, guys, I'll just move that chart down. 2 trading principles. What we're going to be doing is identify the team that's failing and join the other team, or we're going to identify the team that's in command and join that team. So effectively, there's 2 teams, and all we're going to do is work out who's winning and we're going to join them, right? And that's the entire sort of, I know it seems pretty simple. You probably go, hey, I like it, that's really, really simple. That took around about 7 or 8 months worth of work, guys. At the end of 2009 was when I started working on it. I thought this futures trading thing, there's got to be a code. There's got to be a code, a mathematical code. If we can crack the code, and then we can pick up consistent trades on a daily basis, we might actually be able to develop a career as a professional trader. Now, that was in 2009. It's now 2024, and we're flying. So may I suggest it actually went very, very well. Now, flip side of that, as I move through this, what I'm going to use is I'm going to use a chart in order to teach you how to sort of the basic principles of candlestick analysis ultimately. Now, as we do that, a number of you have never seen a financial chart before, or you might be brand new to trading. So let me just highlight what's on this screen to start with. So what we've got firstly, guys, those little spikes down the bottom. So you see those little spikes right down the bottom, but that's the volume that is used on each of those particular candles. Well, what does it effectively mean? You can't see them, Adrian. Can you see all the way down the bottom of that chart? Can you see all the way down the bottom of the chart, the volume? You can now, perfect. Okay, great, awesome. So those little spikes, guys, all the way down the bottom, they're volume. Now, all we want to know at the most basic sort of level of trading, where does the volume come from? That's the amount of contracts or the amount of trades that have been taken in 5 minutes. And we can actually monitor what the market is doing. If there's lots of volume in the market, if there's chat hand is higher. Okay, got it. The chat hand was hiding. All right, let me move that across. So down the bottom goes volume. Basically, it's like petrol in your car. So how much petrol did the market use in order to create that candle, if you will. Now, further, for those guys that are not aware of the trading charts that we use, let me just click on these windows here. Up the top, we have what we call a volatility indicator. So when I took this screenshot, that was sitting around the mid 50s. We're going to see that when we come to the live chart. That's going to basically tell us, guys, what targets we're going to be setting on the market as we trade. Now, we've got price over there on the right-hand side. Guys, this is a trend indicator that we use. Effectively, if it's red, we're trading the market down. If it's green, we're trading the market up. I'll get into a little bit more detail, guys, in the subsequent webinars about that. We've got these beautiful pivot files, guys, these brick walls running across the market. Now, every trader in the world can see those brick walls. Effectively, if you've traded before, you might have heard of support and resistance levels in the market. Effectively, every futures trader in the world can see that. And what we want to be doing is we want to be bouncing off those brick walls. Okay, that'll become really obvious, guys, when we get into the live charts a little bit later on. And finally, guys, we've got extreme volume. Now, I've labeled this a little bit of a cheat. The reason I say cheat is that multiple times tonight on the NASDAQ, as we got ready for the European Open, multiple times that extreme volume triggered on the candle. Effectively, what it means is the sellers, in this case here, a big orange candle, the sellers are using way too much volume, so the market is likely to turn and go back the other way. Now, that is part of our approach to candlestick analysis. I'll show you that when we break this down a little bit further. But today, ironically, as we got multiple extreme volume events in the market, and what actually resulted was multiple buying signals that all went to profit. So I think it's exciting this screenshot's from around about 2 weeks ago. What I want to do is I want to teach you about trading on something from 2 weeks ago, and then go and have a look at the live NASDAQ charts from tonight and draw a parallel between the two. Because if you're really good, at reading the candlesticks in the market, then you shouldn't be surprised by what the market has done tonight. As I said, the theory started in late 2009, early 2010, and it's basically been going great guns since then. Now, I'm going to grab all of the candles, guys, in that black square. I'm going to break them down for you even further so we can start to learn how to do our candlestick analysis. All right, now as I break them down, I have a couple of little principles about candlesticks, we call it CSA. I hope you don't mind if I use an acronym called CSA. We call it CSA. I know it's a little bit of a military thing, right, to break things into acronyms, but it does mean that we can move further, I should say, further and faster in the actual market. Now, when it comes to candlestick analysis, guys, I do want to highlight a very, very important point. Even if you're a 5-minute chart, 15-minute chart, 60-minute chart, commodities, stocks, futures, makes no difference. Because what you're doing is you're actually comparing the most immediate candle that's closed on your chart to the candle immediately before. So what we're doing is basically comparing one candle to the other. Now, what this does is not only does it simplify the process, but it also means that we're acting on the latest intelligence the market's giving us. So if the market's telling us to buy, we've got the best intelligence. If it's telling us to sell, naturally, we've also got the best intelligence. So what we're going to do, guys, for the purpose of educating today, is we're going to label these candles. Right now, in this case here, I've labeled candle 1 and candle 2. And what we're doing in the game of candlestick analysis, even though we can see that this chart has started to move up to the right-hand side, great. Even though we can see that, we're going to always do our candlestick analysis, candle 1 versus candle 2, right? So we're always comparing backwards in order to draw a conclusion as to what the candles are actually telling us about the market. Now, guys, we're going to answer these 4 questions, guys, down in the bottom right-hand corner. So who owns the candle? We want to know who owns the candle, who owns the close, how strong are they, and also how convincing are they, right? This is what we want to determine from this information. Now, when you are working out who owns the candle, all you're doing, it sounds a little bit complex, but it's actually very, very simple. All you're doing is comparing the high of candle number 1 to the high of candle number 2, and the low of candle number 1 to the low of candle number 2. That's all you're doing. So you're comparing the lows and the highs. Now, what I've done, guys, to highlight this point, I put these arrows on for you. So put the arrows on, but I'm also going to put these big brackets on for you as well. Now, if you do have a look, guys, down the bottom of the candle, can everybody see those little gray horizontals across the chart there? Now, can everybody see down the bottom the difference between the lows of candle 2 versus candle 1, right? The difference is around about 6 horizontals. Now, at the top, though, the difference is significantly larger, right? So at this point in time, we're looking at 15 horizontals is the difference. So we look at that, as we look at that and we say, well, Lockie, what does that actually mean? Guys, let me explain to you what it means in the word of candlestick analysis. Now, I've written this down for you. Guys, naturally, the recording will be available, guys. I do believe TTP, or the Trading Pit, guys, is going to actually have this video on YouTube for you. My point being, guys, if we notice the difference at the top is greater than the difference at the bottom, or the distance, I should say, at the bottom, can everybody see that the distance at the top is far greater than the distance at the bottom? Right, now, what does that ultimately mean? The sellers who push the market down have done a better job than the buyers who push the market up. So what does this actually mean? Okay, what does it mean? It means the sellers own the candle. What does that ultimately mean? As this candle being 5 minutes long, so this candle being 5 minutes long, it just means the majority of the people in the market during that 5 minute were sellers. Now, interesting point, if this was a 60-minute candle, exactly right, Anne, well done. That is a seller. What we call, guys, we call that a seller-owned candle. Okay, seller-owned candle. Now, why is that important? Guys, on a 5-minute chart, that tells us that the sellers are trying to push the market down. Okay, now, on a 60-minute chart, 4-hour chart, daily chart, weekly chart, it all means exactly the same thing. So in context right now, if we do candle 1 versus candle 2, all we're doing is comparing the highs to the lows. And at this point in time, we know the sellers own candle number 1. So what we then want to do is we then want to answer another question in the bottom right-hand corner. Lockie, exactly who owns the close? Now this becomes very, very simple, guys. Let me go to the next slide for you. So the question being candle number 1 versus candle number 2, who owns the close? So we know the sellers own the candle. Who owns the close? The beauty of who owns the close is if the candle closes green, we say the buyers own the close. If a candle closes red, probably see this pretty simple, right? So if a candle closes green, the buyers own the close. Okay, if the candle closes red, the sellers own the close. Now, ironically, you're probably going, well, Lockie, what about the big orange one? So the big orange one is a red candle that's used way too much volume. Now, in the case of this screenshot we're working through, is the reason that the sellers use too much volume. Can you guys see that huge orange line or the huge red line and the blue line across the bottom of the chart? They were trading pivots in the market on this particular day. Now, everyone around the world knows the pivots are there. So what the sellers have tried to do, they've tried to sell down through the pivots, and they've used a lot of petrol to do it, and it's failed. Now, interesting point, if the sellers fail to push the market down, the buyers are probably going to jump in and take advantage of that. Now, that would sound probably a lot like identify the team that's failing and join the other team. We were talking about that at the start of the webinar. So in the game, guys, in the game of candlestick analysis, if I read this little comment I wrote on the screen for you there, the green candle confirms the buyers own the close of the candle. What does this mean? It means the buyers were stronger at the end of the candle. Effectively, it also means that the sellers were giving up. So this two-team game, guys, buyers versus sellers. The only reason the buyers were strong is because the sellers gave up. There's no such thing as the sellers going, oh, you know, I just can't be bothered. There's this constant, we're talking, you realize, guys, on the S&P 500, just again, a number, the S&P 500, guys, on futures trading alone turns over more than 3.147. So just picture this number, 3.147 trillion US dollars per day. So there's no such thing as, oh, the sellers gave up or the buyers gave up. That green candle there tells us, as much as we know the sellers own the candle, candle number one, the sellers own the candle, the buyers were strong enough to come through and close the candle green. Now that gives us a very big hint as to where the market is likely to go. Okay, so that there's, they give me a little bit of tip. We identify the team that's failing and then we join the other team. Now let's move on a little bit. Well, in fact, let me look at a little point one I put there on the screen for you. What does this ultimately mean? So the green candle confirms the buyers own the candle. The buyers own the close of the candle. So what? Point number one, the markets are getting ready to reverse. Okay, identical to what they did today, which is interesting. Point number two, you could get a very good trade in context with the market and the extreme volume and the pivot failure. So that's a very, very fancy way of saying if the market cannot go down, it's probably going to go up. So what we need to do is we need to join the market at a point in time that's responsible with reasonable risk and just hold on for long enough until that trade goes to profit. Now, the magic number, what's the magic number for those of you who trade a 5-minute chart? The magic number is 15 minutes. So you will typically know if you've picked the right trade within 15 minutes. It's otherwise known as the rule of 3. Fancy that applies to all time frames, because everything applies to everything. It's just straight mathematics. Now, so we've answered 2 questions, guys. Who owned the candle? We've also spoken about who owns the close. Now, how strong are they? Okay, let me go to this one. I put this on, guys. I put this on the chart because I wanted to highlight to everybody this little tug of war going on over here. The purple is the market. On the left-hand side, we've got the buyers. On the right-hand side, we've got the sellers. If we understand in this game of trading, particularly as a futures trader, that it's buyers versus sellers and the stronger team has to win. If one team is failing, we know the market is about to turn. Ironically, that's exactly what it did multiple times today. So I put those little people on the screen just to remind me to mention that 2-team game. But I think we've pretty well nailed that. Okay, now moving on. In fact, talking to as I talk about that, a point I do want to raise, guys, for those of you that have never actually traded before, you're probably going, well, Lockie, they're just green candles and red candles. So what? Why are you a futures trader? I just want to highlight, guys, if I can, as a futures trader, there's only one price point in the world. In the case of the NASDAQ, it's the Chicago Mercantile Exchange. Why do I mention that? As I mention that because everybody sees the same thing at the same time, regardless of where they are in the world. So for example, guys, tonight, Alex is in Cyprus. We've got tons of people in Australia. We've got people in Malaysia, got people in Singapore. I'm in Japan. We all see exactly the same thing at exactly the same time. Now, what does that mean? What does it mean? Ultimately, as a professional trader, or for those of you that want to be professional traders, if everyone sees the same thing at the same time and they actually know what they're looking at, you can pick up very, very high probability trades day after day after day after day. For example, in the live trading room yesterday, we picked up 12 trades on the NASDAQ, the S&P 500, and the FDAX, which is the three markets we trade, every single trade went to target, every single one. Why or how is it possible that we can trade with such accuracy? Well, simply point, we all see exactly the same thing at exactly the same time. Now, in the live trading room, guys, yesterday we hit 50 traders. If we've got 50 people all watching the same thing at the same time, all helping each other trade, what normally occurs? We normally get on the right side of the market. Now, mind you, it doesn't mean we don't make mistakes, and sure, we get losing trades from time to time, but with so many people watching exactly the same thing at exactly the same time, you can get very, very good very, very quickly at identifying which team is in command and then simply just joining that team. Okay, that's why I wanted to put that on the screen for you there. Now, guys, as we move through the CSA process, let's go one step further. What we're going to do again is candle 1 versus candle 2. And what we're going to talk about is the size of the body of the candle. Now, for those of you that have never traded before, the body of the candle is the colored bit. Okay, it's the colored bit. So if you are looking at that massive orange candle versus the tiny green one, you probably draw exactly the same conclusion as I have. So if we do candle 1 versus candle 2, the buyers are not strong yet. Well, how do you know that? Have a look at the green versus the orange. Guys, if the green was bigger than the orange, the buyers are ready to reverse the market. Okay, if the green is smaller than the orange, they're not ready yet. What does it ultimately mean? So candle 1 versus candle 2, the buyers are not strong enough yet, but they are creating seller doubt in the market. Now, how do we know they created doubt in the market? The candle closed green. If the candle had closed red, we'd be like, buyers are not quite ready yet. The fact that the actual candle there, candle number 1, is closed green, is giving us a hint the buyers are getting ready to make a move against the sellers. Now, mind you, guys, if we fast forward 3 candles, if we literally fast forward 3 candles to the right-hand side, let me put some labels on this. Okay, we're going to compare candle 3 to candle 4. You get a very, very different impression. So have a look, guys, at candle 3, number 4. And when we do our candlestick analysis, we always go the most recent candle to the candle prior. Would everybody agree, guys? Would everybody agree that candle 3, the colored part of the candle, is significantly larger than candle number 4? Okay, can everyone see that? In fact, better question, is there anyone out there in the world, is there anyone in the world watching the webinar, or you might be watching the YouTube recording, guys? I do believe we're streaming on Facebook as well. Is everybody happy that candle number 3 is larger than candle number 4? What this means is finally the buyers have said, we're going to make a statement in the market. The green is bigger than the red. Guess what that means? The buyers are about to take control of the market. We would consider as them to be strong. Now, as it turns out, there is, as you can see underneath that little candle number 3, there is an indicator, guys, built underneath there. There's that little green arrowhead, guys, in the number 1. There are a set of indicators as running behind our charts that do all the candlestick analysis for us. Okay, now, however, as if you're saying, well, Lockie, that's awesome, but I just want to do candlestick analysis and I just want to read the market, pure price movement being the most powerful indicator in the world, pure price movement, but that means you become a candlestick analysis trader. So you're looking at candle number 3, you're saying, Lockie, that's significantly bigger than candle number 4. Awesome. So in terms of how strong are the buyers? Question number 3 down in the bottom right-hand corner. The buyers are now strong. They're showing us they're about to take control of the market. Our last question down the bottom there, guys, is how convincing are they? Now, I've used a little acronym there called CORPC. Right, so I'm going to get a little bit technical, but CORPC simply stands for closing outside the range of the previous candle. Okay, so literally closing outside the range of the previous candle. Green candle, not candle 4. I'm going backwards on that one, mate. So candle 3 versus candle 4. Yeah, you can switch them around, mate, if you want to. Ultimately, guys, what we're doing is we're actually saying, well, candle number 3, the buyers. So it's not only, guys, is it a buyer-owned candle. Okay, so if we did our candlestick analysis, who owns the candle? Ultimately, we compare the high and the high and the low and the low. That's a buyer-owned candle with a buyer-owned close. The buyers are now bigger than the sellers, so they're strong in the market. And finally, guys, are they convincing? All right, let me show you how to determine whether they're convincing or not. What we're doing is we're looking at the actual candle, and we're looking at let me move my little chart around here for a moment. Candle 3, guys, versus candle 4. The buyers are stronger because the green body versus the red body, the green is bigger. Okay, now the buyers are also convincing. Now, what does this mean? They're going to convince a lot of people from around the world to join the market. How do we know that? Because what we do is we draw some little lines on the little previous candle there. So we're going to draw a line at the top of candle number 4. So literally straight across the screen at the extreme high of candle number 4. And we're going to draw a line across the bottom. Goes down the bottom there. What does it ultimately mean? Those two little lines, guys, that I've drawn on that chart there, that is the range of the candlestick. So we go from the extreme low to the extreme high. We call that the range of the candle. Can everybody appreciate at that point in time that the green candle, okay, candle number 3, has closed outside the range of candle number 4? Everybody see that's literally closed beyond the range. That says to everybody, guys, out there in the market, that the buyers are convincing. They're about to turn the market. They're about to send it beautifully in one direction. As if your intent is to identify the team that's failing and join the other team, well, you would be joining the buyers with the intent of trading this market up. Okay, so candlestick analysis is literally about answering those 4 questions. Who owns the candle? Who owns the close? How strong are they? And also, how convincing are they? John, this is a 5-minute chart. So this is a 5-minute chart. I can show you on a range chart, but that's going to be slightly more difficult because tonight is a very, very much I'm trying to keep it as beginner as I possibly can. So yeah, so they make their 5-minute chart, their 5-minute candles on a NASDAQ chart. And what we're going to do is we're going to go and have a look at a live chart shortly and see if anything that we've spoken about candlestick analysis wise actually works really, really well. Not only 2 weeks ago, guys, when I took this screenshot, but also from tonight as well. Okay, so 4 questions, guys. Who owns the candle? That's about the high versus the low. Who owns the close? That's all about the color of the candle. How strong are they? That's comparing the size of the most recent candle to the candle before. And are they convincing? So are they going to convince other people around the world to join the market with the intent of you getting pushed through your profit target? So this is all about, dare I say it, this is all about making as much money as you possibly can out of trading, which does get me very excited, guys. As you know, I live in Japan. The fact that I can be over here doing what I love doing, guys, and being Australia versus Japan makes absolutely no difference to your ability to earn money, as I do find that a very, very exciting concept. Now, what we're going to do, guys, what we're going to be doing down the bottom there, candle 3 versus candle number 4. If the buyers are convincing, everyone will seek to join them with the intent of making money. Guys, now understanding, if you can, this is the futures market. There are thousands of people around the world watching what we're doing, thousands. Now, there's obviously different trading strategies out there and different ways of pulling the market apart, sure. But at the end of the day, it's the candlesticks on the charts that are actually going to show you when to enter the market and ultimately when to exit. All right, let me keep building because I do want to try and be on time. Now, keep this in context, guys, if we can. You're probably looking at the market going, all right, Lockie, well, you've picked up effectively what we call a pivot-based reversal. So we've got this huge extreme volume candle, guys, that's run into a pivot. It's then produced a number of reversal trades. The most obvious is candle number 3. But in context with the wider market, where is candle number 3 versus what happened on the NASDAQ? Okay, so let me show you that. Okay, now, candle number 3, guys, candle number 3 is this little green one all the way down the bottom in the middle of the black square. So what actually occurred? From that strong candle, and this would probably be a pretty key message, from that strong candle, from the first time the buyers actually said, yes, we are interested, we're going to give you a strong, convincing candle. What occurred on the NASDAQ? Just so everybody understands in context, what occurred on the NASDAQ is it moved 350 ticks positive from that signal. Now, 350 ticks positive times $5 per tick. I can let you do the maths on that if you would like to. So what is it, guys? What's actually occurred here? what's actually occurred is we've picked up what we refer to as a pivot-based reversal very, very early in the European trading session, or literally this is the European pre-market. And basically the European market has taken off and absolutely flown to the high side. Now, interesting point for those that already know a little bit about what I'm doing, as this was also a 15-minute chart and a 30-minute chart and a 60-minute chart trade. So if you're thinking, well, Lockie, how could I have grabbed that signal, on, like literally bought above that candle and then just hung on for literally an hour and a half to 2 hours to get that kind of profit? As all we would do is we would apply the rule of three on, say, the 30-minute chart. So you basically take the trade and say, righto, Lockie, I'm in this trade for 90 minutes. What occurred in that 90 minutes? In fact, we might have a guest in the webinar tonight who asked this exact question in the LTR tonight. Lockie, what happens if we get this trade? I said, I want you to hold the NASDAQ for up to 90 minutes. Be very, very interesting to see what the NASDAQ did. We're about to go and have a look at the live chart. So guys, why would we want to understand what a 5-minute chart does? Now, in terms of context, that has produced an absolutely phenomenal trade. If you did want to go for a smaller target, obviously it got paid faster. If you want to go for a larger target, it does take a lot more patience to go for longer range targets. But if your smaller charts and your larger charts are trading together, guys, if they're trading in context, in combination, then again, for the long range traders, that was an absolute sitter. Okay, that was an absolute no-brainer. Now, in saying that, guys, let's move on a little bit further. Let's move, in fact, a point I would like to raise, guys, if I can, if you did take this trade, understanding that the market failed at a pivot, you just think about, say, 10,000 people watching the NASDAQ, and they say, all right, Lockie, the market has failed at a pivot. Where is it likely to go to the next pivot? So even if you traded from one pivot down the bottom to the pivot halfway up through the screen, guys, you've done around about 150 ticks worth of profit times $5 per tick. So it's still a $750 trade. It's still a reasonable trade. There's no question about that. Great question, guys. So if you wanted to enter that trade, your entry point on the NASDAQ would be 2 ticks over the strength of the candle. So 2 ticks over the top of the candle. Phil, your stop loss on that trade would be literally sitting under the retrace of the next candle. So you've got around about 50 ticks at risk to make between 50 up to 100, 150, 200, 250, 300. But if you said, Lockie, I just want to trade with 50 ticks worth of risk, you would have taken that trade. 50 ticks, guys and girls, is $250. I would have had $250 at risk in order to make $250. So great question, Phil. Provided it retraced down and then took off, absolutely brilliant. Okay, but I don't want to get too technical tonight. I don't want to get too technical. Now, guys, I'm going to keep bopping along. Just a little bit of a reminder, guys. That's the Singapore close from the 17th of April. Right, famous for absolutely moving. But that's the European Open from the 17th of April. So what I'm going to do is we're going to grab that lesson about identify the team that's failing and join the other team. We're going to go and apply that to the live charts from today. And one step before we do that, I just want to remind everybody of the most basic principles. So if you don't mind, guys, a little bit of homework. Candlestick analysis has always had 4 components when you first start trading. Guys, as you get quite good at candlestick analysis, there's actually 10 components. We're going to be doing the first 4, guys, in this webinar today. So we're looking at the open, the high, the low, the close. And the reason we're doing that is we want to identify the 4 questions on the bottom left-hand corner. Who owns the candle? Who owns the close? How strong are they? Basically, are they larger than the previous candle? And ultimately, how convincing are they? Because if they are convincing everyone else around the world, guys, to join the market at about the same time you're joining it, you've got this massive group think mentality of thousands of traders from around the world making the same decision, and ultimately the market goes in your favor. Now, I do want to remind guys, particularly for those that aren't aware, this is a series of 9 webinars. So next week, we're going to get a little bit more detailed. The following week, we'll get a little bit more detailed, and we'll work up from there. Guys, again, if you're not following what we do, guys, jump on YouTube. There's every single day, 5 days a week, I'm putting a video on YouTube saying, hey, we did this, we did that, we made this, we did that, we made this mistake. So guys, if you're new to what we do, just jump on Doro Day Trading on YouTube, follow what we do, guys, you're going to be pretty impressed pretty quickly as to how quickly this moves. Okay, live charts from tonight. Guys, now I would love if there's someone in the webinar tonight that has not done a lot of trading. Can I have a crash test dummy? Guys, can I have somebody that hasn't done a lot of trading? And what I'm going to do is I'm going to basically test, do we understand this concept of open, high, low, close, or can we actually measure, guys, the strength of the candle, right? So if I have a volunteer out there, then absolutely brilliant. If I don't have a volunteer, I'm going to pick a lady on the Gold Coast. She knows who she is. But you know what, guys, we've got actually, guys, I actually picked on Suzanne last night. Guys, we have a beautiful girl in the webinar tonight called Beck. Beck, are you open to being used as a crash test dummy with absolutely no warning? Now, Beck can come, Beck can turn around and say, no, I don't want to be a crash test dummy at all. So again, if I've got a volunteer, absolutely brilliant. If I don't have a volunteer, it's all good. Beck, okay, Beck's okay to go. All right, now, what I want to highlight, guys, firstly, again, what we've got on the chart. Right, so again, we've got this little red section over here on the left-hand side, guys. That is what we call the European pre-market, and then we've got the actual cash market itself. Right, so I'm going to draw this on for you. Yeah, I was going to say, Beck, Suzanne's saying thank you because I used Suzanne in a webinar last night, and Suzanne doesn't want to be picked on 2 days in a row. So there we go. So the first trading session, guys, the first arrow, that's called the European pre-market. Now, a number of the traders went very, very well in the European pre-market, and this is ultimately the European cash market, all right? So that's where the live trading room runs all the way through until this point here. Okay, that's when the live trading room runs. Now, in saying that, what we want to do is again, for guys, if we pick on young Beck, I said to everybody, guys, as we rolled into the session today, we spoke about that extreme volume. Okay, we spoke about extreme volume. And I said that every time the sellers show extreme volume, which is this orange candle, followed by that orange candle there, you can probably expect the market to reverse. All right, this basically says to everybody globally, the sellers are running out of steam. All right, now, what it ultimately means, guys, my slightly more advanced traders who actually trade what we call the Singapore close or the European pre-market, they basically bought the market over the top of that orange candle once it sold down and came back the other way. Now, why did they do that? Can everybody see, if we were to, let me put a label on the chart for you here, just to make it, we'll do candle 1 versus candle number 2. Okay, so here's candle number 1. I'm going to make this really, really fat and really obvious. Okay, really fat and really obvious. So here is candle number 1, guys. That's the little orange candle. And candle number 2 here. Oh, Beck, I'm about to pick on you. Candle number 2. Mind you, Beck, this is not going to be, guys, this is not going to be complex, let me tell you. Okay, now, Beck, would you be happy to say that candle number 1, so candle number 1 is significantly smaller than candle number 2? Are you happy with that? So yeah, candle number 1 is significantly smaller than candle number 2. For everyone watching the webinar tonight, what does it actually mean? This enormous orange candle here is a statement by the sellers that we are completely in command of the market. Huge orange candle, lots of volume, but they're in charge of the market. Okay, this candle tells us the sellers have run out of steam. How do we know that? As all we do, as Beck has concluded correctly, as we look at the size of the body of candle number 1 versus the size of the body of candle number 2. So this says to us, candle number 1, the sellers have completely lost control of the market. Now, there's only one reason the sellers lose control of the market, is the buyers are about to take control. So what did we say, guys, at the start of the webinar? Identify the team who is failing and join the other team. Right, that's exactly what we did today. So my traders, guys, my slightly more advanced traders, a number of the prop team traders, guys, as you know, we now run a prop desk, they bought the market over the top of the candle. What they did is they waited for the sellers to sell down and fail again, and then the buyers came back through, they bought the market. Now, Because if we want to do our candlestick analysis, we'd ask the question, well, Lockie, did they make the right decision? That's a good question. Simply move candle 1 and candle 2 across. And let's do the same comparison again. So guys, I'll go back to Beck. I'd say, Beck, is the green body of candle number 1 bigger than the orange body of candle number 2? And you're probably looking at this going, well, duh, Lockie, this is pretty straightforward. And then I'd ask another question. So what do we know from the content we've already been through? What do we know, guys, about a bigger green body? So, okay, well, that means the buyers, I'll get rid of the circle, the buyers are now stronger than the sellers. So did the boys and girls in the trading team this afternoon, guys, make the right decision? Yes, they did. Now, another point, guys, I'd love to mention to everybody. Let's draw a little line across the top of the orange candle. Okay, line across the top of the orange candle and a line across the bottom of the orange candle. And then I'm going to ask the question, John, there are very long tails on the candle bodies, 100%. So these long tails, mate, these long tails for webinar number 1, so I'll be very careful here, mate. Webinar number 1 of a 9-part series, this basically is the sellers failing. Now, we're going to get into more detail in later webinars. You could say it's the sellers doing a bit of a recon. That's fine, but they basically failed. Okay, basically failed. Okay, guys, back to candle 1 versus candle number 2. Is everybody happy that the green candle, so I'm going back to Beck, right? So going back to Beck. Beck, are you happy that the green candle here has closed outside the range of the little orange candle, right? So guys, I've drawn a line across the top of the candle there, and there's our little green close. So we would actually say, not only are the buyers strong, but they are also convincing. So remember those 4 questions? Who owns the candle? Who owns the close? How strong are they? How convincing are they? So guys, so my trading team took this exact signal this afternoon, said, righto, Lockie, as per the rule of three, we're going to hold this candle for 15 minutes, which is 1, 2, 3. So basically they traded from down here up to here. So I'll put a square on it for you right here. They did that, guys, and it means around about 30 ticks per contract, or around about $150 US. Okay, around about $150 US. They were able to neutralize their risk on the trade, guys, after 5 minutes. Okay, for those people that love risk. Now, interesting point, guys, exactly the same thing occurred again. And you're probably looking at this going, well, Lockie, this looks like a broken record. So, Beck, can I borrow you again? Guys, we're gonna look at candle 1 and we're gonna look at candle 2. So once again, guys, the sellers, guys, Beck's come to her first webinar and he's like, Lockie, why are you picking on me? But anyway, my point being, guys, can everybody see this huge orange candle? I was going to say this horrendous orange candle. Says to us, the sellers are using too much volume. The market is about to turn. Right. So when we look at candle 1 versus candle 2, we would look at this and say, all right, huge orange candle number 2, tiny green candle. The buyers have won the close of the candle, and somebody said that in the webinar last night, and I did crack up laughing. So guys, not to be rude, but size matters. If anybody tells you size doesn't matter, just tell them, no, I went to a webinar with Lockie. It's all about size. Is everybody happy, guys, that this little candle here, candle number 1, so back to Beck and everybody. Beck, are you happy that this little candle number 1 is closed green? Oh, so what does that ultimately mean? It means the buyers won the close of the candle. So the sellers have tried very, very hard to push the market down, and that has failed badly. So what did the professional traders do? Right? The professional traders said, all right, well, if the sellers can't go down, I'm going to join the buyers. So what did they do? They joined the buyers above the candle again. I'll just bring that line across there and said, all right, pulls them. But then they said, all right, Lockie, as per the rule of 3, I'm going to wait 15 minutes to see how the trade goes. All right, so let me show you. You're probably going, Lockie, this is so boring. So let's have a look. Candle number 1, candle number 2, candle number 3. So at that point in time, guys, it had gone 10, 20, 30, 40, 50, 60, almost 70 ticks in your favor, almost 70 ticks. So 70 times $5. It had already gone $350 in your favor, guys, in 15 minutes. So then the professional traders went, well, you know what? If we're going to rally into the open, I'm going to stay long on my trade. Guys, have a look what happened. So shout out, guys, to Andy. Right? Andy did 152 ticks on these trades. So that's 152 times $5. Right, so you guys can do the maths on that if you want to. Now, Megna, guys, Megna was also trading this afternoon. She did more than 100 ticks. Emma did more than 100 ticks. I think Andy did, guys, around about 95 ticks. So a lot of traders went really, really well today. Yeah, they went really, really, really well. Now, guys, interesting point. If I can, I'm just looking at my time, guys. We've got around 2 minutes left. We've got around 2 minutes left. For those people that trade the European pre-market, it's gone really, really well. Okay. For those people that trade the European Open, which is the arrow that I'm about to draw on the charts, for those that trade the European Open, what we did is literally this. The market sold down. So literally the market sold down and failed at a brick wall. See this little blue circle here? So identify, what do we do as futures traders? We identify the team that's failing and then we join the other team. So a number of traders, guys, in this case here, joined the buyers and went long. A number of other traders waited for the buyers, this candle here, this huge green candle. In fact, Beck, I'm going to ask you one more question, guys, and can everybody say thank you to Beck? I think we're saying thank you to Beck from 7 countries tonight, which would be kind of brilliant. But guys, if we do this before, you're probably going to follow this game. Guys, you're probably going to follow this game. So look, Beck, everyone's saying thank you, Beck. Everyone's saying thank you, Beck. But my point being is this, is if we compare candle number 1 to candle number 2, okay, what does it actually tell you, guys? Have a look at the size of candle number 1 versus the size of candle number 2. You're probably looking at that, and guys, it doesn't take a rocket scientist to work out, well, Lockie, the buyers have taken complete control of the market using that candle. So my last question to Beck, is candle number 1 larger than candle number 2? Now you're probably going, well, Beck's been given a really easy question at the end. Of course it is. So what we've actually got is underneath this little candle, is a little indicator that says, hey, guess what? The buyers are 3 times stronger on this candle than the sellers were on the previous candle. So if you want, you can join the buyers with the intent of getting paid. Now, guys, if this agrees with a larger chart trade, which it did, guys, and this is what I wanted to show you. This will be one of my last points. This was a 30-minute chart trade. Guys, what that means is we hold the trade for 90 minutes, okay, to try and get the maximum profit out of the trade. Now, have a look what's occurred. Have a look what's occurred. So I did get the question in the live trading room this afternoon, guys. And again, great question. So this was a 30-minute chart trade. So for those of you that want to hold these trades for a little bit longer, as if it's a 30-minute chart trade, hold it for 90 minutes. So let's have a look. The trade confirmed at 4:30 in the afternoon my time. Okay, so that means it's going to maximize its profit 4:30, 5:30, around about 6 p.m. So right here is when the trade would typically maximize its profit. Okay, right there. Now, as it turns out, let's say you said, all right, Lockie, I want to go on that one for 90 minutes and I'm just going to dump the trade. Now, clearly it's gone a little bit further. That's okay. Because you would have got in, goes over the top of the candle. So again, if you wanted to trade it, Phil, great question. If you wanted to trade it, your entry goes above the candle, your stop goes below the candle. All right, so what does that mean? You've got 1, 2, 3, 4, 5, got around about 60 ticks of risk, or around about $300 at risk. Okay, now if that's too much, guys, just wait for the next candle to sell down a little bit, bounce off, and then put your stop loss underneath that. So you've got around about, say, 150 US at risk. What did it produce, guys? 10, 20, 30, 40, 50, 60, 70, 80, 90, 100. This is going to get very boring. 110, 120, 130, 140, 150, 160. If you got out at the close of that candle, guys, you're about 165 ticks into profit. 165 times $5 US. So just over 800 US dollars. Okay, so that's a live chart, guys. That's a live chart. What has the NASDAQ basically done? Let's have a look. Okay, the NASDAQ has rallied from this buying signal and that buying signal. It's rallied all the way up to the top of the jar. It's tried to reverse off this pivot, and then it's run up and it's got to the next pivot and it's reversed off there. If the webinar went for another hour, guys, I would talk about all of the reversal signals that have just occurred on the NASDAQ. But you can see the NASDAQ has actually turned off this pivot and it's run down another 150 ticks the other way. Guess what it's doing right now? I mean, that's a live chart, guys. It's a live chart. What do you think's probably going to occur? Because right now the sellers have completely run out of steam. The only reason the sellers ran out of steam is because the buyers are about to take control of the market. Now, guys, I can't make this up. That's a live chart, right? There's nowhere to hide on a live chart. And that's why I love coaching people on live charts. So, guys, I wanted to run on time. For those that know me very well, you know that I'm famous for going over time. So my point being is, can I say thank you to Alex, guys, and thank you to the Trading Pit team for having me live, guys, on the web tonight. I hope you've learned something about the power of candlestick analysis, open, high, low, close. And during the next session, guys, where we're doing exactly the same time next week, we're going to be doing stair stepping in the market. So literally how to read the ebb and flow of buyers and sellers in the market. And what we're going to be doing is we're going to be combining that with candlestick analysis. So we're going to combine the stair step in the market with our candlestick analysis, as we're going to start to build a really, really good understanding about why the markets do what they do. So I hope you guys have got some awesome value out of tonight, and a massive thank you to the Trading Pit and also to Alex, guys, for having us in the webinar tonight. I hope you guys have learned lots.
Thank you, Lockie, as well. Thank you very much. It was an amazing webinar. Very well said. It will be uploaded soon in the official YouTube channel of the Trading Pit, so people, they can find it there. Thank you very much, and looking forward for next week.
Right, guys. Have a great night wherever you are in the world. And Alex and TTP, thank you for having me. Very exciting year ahead. So thank you, guys. I appreciate that. Cheers. Bye. Bye-bye. Bye.